Fetch AI at the time of this recording continues to see further breakdown moves, and we have now lost our significant key area of support between the 1.778 and the $1.513. And on today's update video, I will be discussing the most significant key areas that we need to pay attention to, basing my analysis on the Deriv structures, and above all, discuss my long-term price prediction analysis. So make sure that you stick around till the end of the video, and starting the video by first giving you my long-term price prediction analysis. I believe that after getting our bear market lows last year, we started an impulsive movement to the upside in a move that peaked above the 3.479 in the formation of these Deriv count 1. And after we peaked in the formation of that first wave, we started a pullback to the lower side in the formation of these wave 2 into the minimum target areas highlighted on the charts using this blue target area, an area that we have now fully maximized. And at some point we had started to see a reaction to the upside in what I believe is the start of an impulsive Deriv count 3, whose minimum target areas can be given by connecting the Fibonacci's from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, and that is above the $6 mark. And once we have a high in the formation of this wave 3, we can expect a pullback in a wave 4 and then continue pushing higher in the formation of this Deriv count 5, possibly taking us back above the $10 mark. So that is all I'm expecting on the long term. Jumping to the 4-hour chart to now discuss the short-term price prediction analysis, I want to start the video by first giving you a recap of what has been happening from the lows that we made on the 4th of November, where you can see that we peaked impulsively in a wave 1, a pullback in a wave 2, a wave 3, a wave 4, and then finally peaked in the formation of this wave 5, giving us a high above the $2.2. And that 5-wave structure to the upside completed the formation of these larger Deriv count 3. And having seen the formation of that wave 3, I expected a pullback in the formation of these Deriv count 4 into the minimum target areas highlighted on the charts using this red target area, an area that I came up with by connecting the fibs from the low of the first wave to the high of this wave 3, giving me a minimum pullback target area between the fib level 0.382 and a maximum of the 618. And that was between the 1.779 and the 1.517, an area that we fully maximized. And you can now see that we have now lost support above the 1.513, flipping it back into resistance. We have also lost support above the 1.48, and that means that whatever is playing out at the moment is not an Deriv count 4 anymore. And that means that there are high chances that these 5-wave structure that I have been tracking from the lows we made on the 5th of August is now failing. And that means that we need to come up with an alternative scenario. And the alternative scenario is that whatever we have here on the chart is much of an ABC corrective structure, having this as a wave A. Then we saw a pullback in a wave B, and there are chances that we have now peaked in the formation of this wave C. We can also have the chances that maybe we are yet to peak in the formation of this wave C, and maybe the wave C might be a 5-wave structure to the upside. And if that is the case, then this could be a wave 1 to the upside. And I can try and clear some of these Deriv structures first. So there are chances that from the lows we made on the 4th of November, we peaked in a wave 1. And whatever is playing out at the moment is a pullback in a wave 2 before we can finally bounce in a wave 3, then expect a wave 4 and then the wave 5, giving us the high for these wave C to the upper side. And if that is the case, then we can identify minimum target areas for the second wave using the Fibonacci's, connecting the fibs from the lows we made on the 4th of November to the highs above the $2.2. And that gives me a minimum target area for the second wave between the fib level 0.382 and a maximum of the 7.8, and that means that we need to see fetch AI holding above the 1.32 to 1, and on holding above that key area, there are chances that we can get another bounce in a wave 3, then expect a wave 4, and then finally pick to the upside in the formation of that wave 5, completing the formation of that wave C to the upper side. And if by any chance we lose the 7.8, then that will be suggesting a more bearish case scenario where we can easily see a reset of the lows we made on the 5th of August below the 0.681. So that is all I'm expecting here on the Fetch AI chart on the short term and also on the long term. And let's be patient and see how that plays out, and I will ensure you stay up to date.